December 10th. Everything is basically converging on that date. That's the day the market is either going to go left or right. Left would mean extremely bearish territory. Right would mean extremely bullish territory and could mark the beginning of the next big bull run. And there's a specific event happening on December 10th that affects every single crypto you own, especially XRP. That's what we're breaking down today. Before I reveal it, quick quiz. What do you think the December 10th event is? Think about it for a second. Imagine how you'd position your XRP around that date. All right, let's get into it. The December 10th event is the next Federal Reserve announcement on interest rates. That's when the Fed will say whether they're cutting rates, keeping them unchanged, or doing something unexpected. I know everyone is tired of hearing about interest rates, but this is massive. It doesn't just move the stock market, it impacts crypto directly. Right now, the market is pricing in roughly an 82% chance that we get a rate reduction. But nothing is guaranteed, and that uncertainty is exactly what's creating volatility. A well-known market analyst recently explained the situation like this. Until the Fed meeting, he expects the market to stay choppy. If we fail to break out and instead lose the key lows on the chart, we could make another leg down before the next move higher. His base case is choppy into the Fed, risk to the downside if those lows get taken out, and then a push higher from mid-December into mid-January if the Fed's tone is supportive. He was talking about stocks, but historically crypto behaves almost in lockstep with stocks around big macro events like Federal Reserve decisions. When liquidity comes in, stocks and crypto both tend to run. When things tighten or markets panic, both tend to fall. So the pattern he described for stocks is very likely what Bitcoin, XRP, and the rest of the market could experience. So what does this mean for XRP and crypto? Scenario 1, bearish. If the Fed disappoints the market, for example, by not cutting rates when everyone expects them to, we could see key lows get broken. For crypto, that could mean Bitcoin rolling over, altcoins taking a bigger hit, and XRP retesting lower support levels before any real recovery. Scenario 2, bullish. If the Fed delivers a rate cut with a friendly tone, that could be the moment when risk assets catch a strong bid. Crypto could start a more sustained move higher. XRP, which usually reacts aggressively when liquidity arrives, could move fast, either leading or following closely behind Bitcoin. Either way, December 10th is a pivotal moment. Now there's another important date almost nobody is talking about, December 1st. That's when the Federal Reserve's quantitative tightening program, also known as QT, is officially scheduled to end. QT is when the Fed is pulling liquidity out of the system. Ending QT means they stop draining liquidity. When QT ends, it's like gradually turning the money taps back on. More liquidity tends to flow into financial markets. Over time, that can support lower interest rates across mortgages, car loans, and corporate borrowing. And when money becomes cheaper and more abundant, risk assets usually benefit. That includes stocks, Bitcoin, and XRP. So we have December 1st, the end of QT, bringing more liquidity, and December 10th, the potential rate cut, making borrowing cheaper. Together, these two events can flip the narrative from bears in control to bulls taking over. Right now, the crypto market is already showing signs of strength. Total market cap is up around 2.5%. Bitcoin is back above $90,000. Ethereum is over $3,000. XRP is around $220 and pushing higher. Across the board, the bulls are trying to regain control. It doesn't mean we go straight up, but the market is clearly positioning itself ahead of these December events. In environments like this, where one decision can flip the entire market, you need a plan. Emotions are not a strategy. One of the smartest approaches during uncertain times is dollar cost averaging, especially when you know whether an asset is at an extreme discount, fair value, or overbought. You can use indicators or systems that evaluate whether it's a good moment to accumulate, to wait, or to take profits. For example, Bitcoin right now would be considered at an extreme discount for long-term DCA. A project like World Liberty Financial might show fair value. XRP might be somewhere in the middle, improving as price rises, but also gradually heading toward zones where starting heavy new positions becomes less attractive. The point isn't that you need a magical tool. The point is that you need a consistent system. A system to tell you when it might be a good time to accumulate, when to slow down, and when to secure profits. Because if December 1st and December 10th mark the transition from tightening to easing, from fear to greed, you want to act based on a plan, not panic or FOMO. To recap, December 1st marks the official end of quantitative tightening, meaning more liquidity slowly enters the system. December 10th is the Federal Reserve's interest rate decision, with an 82% chance of a rate cut currently priced in. Stocks and crypto historically move together around these major macro events. If things go well, this could mark the beginning of a new bull phase. If things go poorly, we might see one more strong leg down before the next major move up. Now I want to hear from you. How are you positioning your XRP around December 10th? Are you dollar cost averaging, waiting for a dip, or already fully in? Thanks for listening. Stay prepared, stay informed, and I'll see you in the next one. Nothing in this content is financial advice. Always do your own research.